Good morning, friends. I hope your weekend has started well. Now, this is a weekend view video where I want to present certain facts, which means that things that I am watching which are changing. Please understand this is no recommendation from me, but I would like to present certain facts because weekend is the time when we do more positional kind of analysis, and the facts which I want to place in front of you are showing me that the market is getting into a corner. What is a corner? Where the odds of the market turn, and not permanently, a temporary turn, are increasing. And I will tell you why I think so. I also know that the US markets have closed up very sharply. So keep everything in context, and it's always good to keep things in mind when you are trading, and you should have an eye on both sides. Now, a Lakir ka Fakir analysis is US markets are up, so we are going up. Okay. But we have to look at what our market is doing as well, because finally you are trading our market, you are not trading the US market. And sometimes, you know, when the US market falls 450 points on the Dow, we don't fall. So let's see what I have to present, and then you can make your own judgment. Let's start today with a weekly chart, and let me give you better charts than normal, because often we use the kite charts which are not very pretty looking. Okay, now this is the weekly chart of the Nifty. Immediately, what do you see? What you see is a very small little candle. That candle has been made at a point of resistance. Okay, so you can say this kind of entire zone on a weekly basis is some kind of a resistance, which is from 10,750 to 10,950. Okay, this is one issue, that on a weekly basis the market is finding trouble to close at its highs, and there is clear congestion if you look on the left. Okay, what is next? Let's check out what the FII data is showing us. If you see, FII sold yesterday, DII sold yesterday, okay. For the past few days also they have been sellers. What does this mean? That the institutions who bought this 1500 crores, it was bought by retail. Okay. So the issue here is that, who is buying? Let me see if I can get some kind of previous data if possible. But be that as it may, two large players are not buying. Okay. Now let's go back to our chart. What am I saying here? What I am saying here is that the odds of a correction, at least to somewhere in this zone, which is broad, you know, 10,000 type of zone, have increased. Now let's go back to the daily chart. On a daily chart, what is this? This is a rectangle, the box that we talk about. The market is winding and is preparing for a large move. After this kind of rally, what are the odds of that large move being on the downside? The odds are very good. Now, why this will happen, whether global markets will turn, etc., 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 that I don't know. All I am trying to present is certain facts. If yesterday you saw the market breadth, you had 450 advances and 1200 declines. If this was such a simple kind of a sideways consolidation, the market breadth would have been better. What I am trying to get at is that we are having a situation which is very similar to what we had at 9,000, where you can see this narrowing of the market and from where you got this kind of a move. This was 9,000. This is 10,700, 800. So the possibility is growing that we could have a similar kind of move which corrects the excesses. Possibility. I think it's setting up into a 4 is to 1 sort of trade where if you can buy a 10,600 put and sell a 10,200 put, your debit spread is about 100 points. And if we do correct towards 10,200, chances are you will make about 300, 350 points net of everything. So that is the premise that I want to keep in front of you. And if you think this works for you, you can try to do it, because the risk is 100 points, the reward is 300, maybe 400 points. So that is how a risk reward is setting up. Let me recap the factors that I have presented. A, you are at a very, very stiff resistance zone. B, institutions are selling. Okay, now people who are selling on Friday will not start buying on Monday, thinking that because US market is up, so hence we should start buying here. This is not a favorite place of institutional buying. Number three, if you leave out Reliance and TCS, the market is not able to go up. So the leadership is narrowing, and it is narrowing after this kind of a large rally. Okay, so the point here is that you have an 80% odds for a positional trade back towards this point. Let me take another factor which I generally like to look at. What is the uh, 20-day moving average doing? Okay. So let's see if we can look at the moving average, and this is 20. Increase the size. So this is the 20-day moving average. The 20-day moving average is right now at 10,380 thereabouts. Okay. So in this sort of a situation, the market has not corrected to its 50-day moving average also in a while. So it is also possible that once a correction starts, you could get somewhere between 20 and 50. Again, I am talking from a July type of perspective. The 50-day moving average here is 9862. Somewhere in this area between the 20 and 50, markets tend to correct. Point being that from 9600 to 10,800 has been a large rally, and a mild correction could get you back into this 10,200 type of zone. Now let's look at what the bank nifty is doing. Again, weekly chart of bank nifty. Now just see what kind of candle you have made. Is this a bullish candle? No. It is a negative candle after a rally. Again, if you come back to the daily, just see what kind of trend the Bank Nifty is showing. Look at this narrowing of the action. It has a breakout, one day later it fails. Again breakout, one day later it fails. So there is no question that this is a weak index. Okay. So the issue we have here is that the odds are shifting on the side of a correction. Why don't we see a 20 DMA of the Bank Nifty? Again, it's not able to move away from the 20, and this sort of trend line may get violated fairly soon. So the issue remains that if a large component is not able to participate, then how long can one stock and two stocks take the market higher, and that is what is reflected in the poor market breadth. Let's have a look at Reliance, because that remains a issue which is taking the market on the upside. Hmm. Okay, now let's plot the 20 DMA for Reliance. Now the 20-day moving average for Reliance is 1735. Okay, and it has closed at about 1900. So extremely overextended. Yes, it's a great company, it's a great story, etc., etc., etc. But for our case, it is getting quite overextended. Okay. Now, one thing I would like to show you on Bank Nifty, which I forgot, is that if a Bank Nifty correction starts, chances are it will correct to its 50-day moving average. So let's find out This is the 50-day moving average on Bank Nifty, which is about 20,300. So you see, the point is that this is how you look at market action, that has this instrument been able to make great headway. The issue is that if anything cannot move higher, what is it setting up for? It is setting up for downside. The odds are high. Again and again, I am repeating that I am telling you how the odds are now shifting. Okay, on the intraday style chart, let's have a look at a 15-minute chart of the Bank Nifty. Again, every second day you collapse towards the lows. Okay, so even on an intraday basis, the follow through is extremely poor. Yesterday, Nifty went up in the end, Bank Nifty failed. So, the point of anticipation is that is the index able to move up as easily as it was doing before. So, I think in the last couple of months, the odds of a market, showing you a correction of 5 to 7% have increased in a very big manner. Now, this is the hourly chart of the Nifty where it is winding, and once an index winds, it tends to break on the upside as we did in this 9,000 kind of zone. Okay. Individual stocks, again, if you leave out Reliance and TCS, have not shown great propensity to go up. And what is the reason for that? The reason is the abundance of FII selling. If FIIs keep, getting out of the market, there is no Indian player, not even Indian retail, which seems to have found a new fancy for markets, which can, compete with that selling. So what is happening around these levels? The market is taken up and stocks are sold. Again taken up, stocks are sold. So what is the you know um stock for this sort of a view? Basically, if you start to cross, say, 10,900, 1100, 11,000, I would say that the view hasn't played out. But the analysis is correct, and if it plays out, it will give you a large move. I hope you understood what I want to say and will take it in that sort of spirit that the first clues are coming. All clues often don't work out. So the idea is to keep these clues in mind so that you know where you are sitting. Another way of looking at this is take profits off because the upside seems limited. Okay, and do things within your capacity so that there are no issues. So that should be it for this Nifty, Bank Nifty type of view. I'm not saying we are going to turn for good. What I am saying is that the market is having great difficulty in moving up and is likely to have some sort of correction, and corrections are often usual and good for the market. And again, we are looking at 10,000, 10,200. Now, what will trigger it? What will lead to it? That time will tell. That should be it for this session. Take care, trade well, and please consult your financial advisor.